So first, I just want to thank you for attending this and sparing your time to listen to me for half an hour or so. It's a pleasure to have you here and to be delivering this first session in our Bolster Your Business series. So this one is about how to save tax and draw more money out of your business. Oh, hang on, I'm just admitting a few more people here. So we're using Zoom today to deliver this webinar. And for those of you that aren't unfamiliar with Zoom, here are the control panels. I've put everyone on mute so that you can communicate through the chat button so everybody else can focus on what I am saying. If you can submit any questions you've got as we go along on the chat button, and I will try and answer them as we go, because I think that's easier because we're talking about that area of tax at that time. The session is being recorded and it will be available to people afterwards if there's anything you missed or anything you want to go over. Also, as ever, if there's anything you want after the session, just drop us an email at the hello@ email address and we can answer your questions then. So just to introduce myself, my name is Carrie Stokes and I'm the director at Spotlight Accounting. And at Spotlight Accounting, we try and work with business owners to help them achieve their visions. Now, a vision for a business can vary from person to person. So we try and understand what people are trying to achieve out their business and support them in getting there. Our favourite kind of people we like to work with are owner-managed businesses that want to develop and grow and are prepared to take actions to meet their goals. Whilst we're based in Shropshire, we are a cloud-based accountancy practice, so we do have a lot of local clients, but we do deal with clients all over the UK. Now, before I get into this session, I just want to point out our usual disclosure. This webinar is for educational purposes. It's of a general nature and it does not constitute individual tax advice. The rates I'm using and the allowances referred to are for the 2022-2023 tax year. So before I want to start, this webinar is aimed at businesses that are operating through a limited company. Also, accountants have a habit of talking in what is known as accountantese. So I just want to run through a few key terms with you that I'm going to use throughout the webinar. The first one is tax deductible. Tax deductible is an expense or cost that will reduce your corporation tax bill. I'm also going to refer to taxable benefits. These are benefits that employees, directors, and other stakeholders receive that are classed as a benefit in kind. And a benefit in kind is the tax employees pay on the value of the benefit that they receive from the business. So what am I going to cover today? Firstly, I'm going to do a brief introduction. Then we're going to look at how you can extract value using salary and dividends. Then we're going to look at pension schemes. Then we're going to look at loans. Then I'm going to talk about business assets. Then we're going to turn to employee benefits, followed by other tax efficient benefits you can draw out your business. Then we're going to look at business expenses that you might pay personally. Then I've got a bonus tip based on the current climate. And then we're going to talk about the next steps you can take. And then we'll close with a question and answer session if there's anything that hasn't been covered throughout the session. And then we'll close up. So, by way of an introduction, the purpose of today is to highlight tax efficient ways that you, your family, and your employees can draw cash and value out of your business. Ultimately, this will save you tax and this will leave more money in your personal pension and business pots. The less you pay to HMRC, the more you've got within your various pots. There are over 30 ways I've identified that we'll run through. So the first question you might ask if you're a client of ours is, why haven't I run through these before? Well, most businesses only tend to talk to their accountant or use their accountant for compliance work. So we'll be looking at year end after the date, and then you'll be looking backwards. Also, any requests for advice are normally specific. So I need a company car, what's the best way? Or any requests tend to be of a general nature. How can I get my tax bill down? None of these situations look at your full situation. In these situations, often accountants aren't aware of your full situation. So for example, we had a client that came on board who used to buy a new van every year to save tax, as he'd asked his accountant before how to save his tax bill. And the accountant said, if you buy a van before year end, it will drop it down. However, when we looked at his whole personal circumstances and his business situation, it was better to change the van less frequently and contribute into a pension plan. This thus increasing his pension pot and not having a wasting asset replaced every year. I do need to point out that not all the methods here will be relevant for you and your business, but I'm pretty sure that some of them will be, and you will get some value from attending this webinar. Take plenty of notes and ask questions as you go along in the chat. And if there's anything we haven't covered, you can email us at hello@spotlightaccounting.co.uk or drop me a message afterwards. We do have a copy of a checklist that you can use for this. And if you want a copy of it, please email the hello@ address and one of the team will get it over to you. So firstly, let's look at salary and dividends. With salary, the most optimum level for a salary is £823 per month if you have no employees, or £1,047.50 if you do have employees. This can differ in certain circumstances if you have other employment income or you are eligible for research and development tax credits, and a significant amount of time is spent on these activities. You can also consider employing a spouse, partner, or family member if they don't have another job and they have a role within the company that they actually do something, can have do something on behalf of the business. Dividends. Dividends are an after-tax deduction. They're not a cost, and they're paid to shareholders as a reward for ownership for their shares. One thing people aren't often aware of is that directors and shareholders can be different individuals. The first £2,000 of dividends you receive a year is tax-free. And at the moment, up to the basic tax rate band, 8.75% tax is paid. So it is a tax efficient way of drawing income out of the business. From April, that drops again to 7.5%. Once your income is over 50,270, tax is paid at 37.5%. And from April, it's paid at 32.5%. The other thing to point out is if you have children and you receive child benefit, once your dividends or your total income, goes over £50,000, you start losing your child benefit. So again, that's a lower level that you need to work towards before paying higher rate tax. You can look at giving some shares to your family. As mentioned, family members don't have to be directors, but they can be shareholders. If you give members to your spouse, there are no capital gains implications. But if you give shares to other members of your family, there can be capital gains implications. The other thing that a lot of people aren't aware of is you can use what's known as alphabet shares. So family members could potentially have a different category of share, which means that you can play different values of dividends against that share. We do always recommend taking individual tax advice if you're looking at amending your shareholdings, but it can be a way of structuring it so that you can utilise basic rate bands of family and other members. Pensions. First, registered pension schemes. You can use the business to contribute into a personal pension scheme, which is a great tool as it saves for the future and it's tax efficient. Limited companies can pay up to £40,000 in a registered pension scheme and get full. Oh, sorry, the office. Limited companies pay up to £40,000 into a registered pension scheme and get full tax relief. There are some restrictions that can affect individuals. If you're making pension scheme contributions These differ to those from the workplace pension, so you're not limited by the amount you can earn. If you're looking to make pension contributions, then take individual advice from a tax and investment perspective. So talk to your accountant and your financial advisor. Salary exchange pension schemes. This is where an employee gives some of their salary in exchange for an employer pension. This saves national insurance on the amounts involved. There are HR and tax implications, but using a salary exchange pension scheme is a way that both you and your employees can save national insurance. Again, I've said it, but I'll say it again, you need to take HR and tax advice because there are amendments to contracts involved. Loans. Loaning money to the business. Every individual can receive £1,000 interest tax-free if they are a basic rate payer. So if you've got surplus cash and your business has got a cash flow requirement, you can loan money to the business, you can charge interest on these amounts, and it's probably better you have the interest rather than the bank. It does go on your personal tax return form, but if it's below the 1,000 tax-free amount, you get extra money out and the company saves the 19% corporation tax on it. Employee loans. You can loan an employee up to £10,000 tax-free. So again, this can be a good way if an employee wants to change their car, you can lend it to them interest-free. They obviously save money because they're not paying interest to the bank. And if you've got surplus cash, it is increasing a bit, but you're not earning a lot of interest on your money. You can also borrow money from the business. So there may be a situation where the business has personal cash and you might need it personally. For example, you might have home improvements to make. You may not want to take a dividend because you might be up to the higher rate tax bracket. So you can loan the money from the business. Up to £10,000 has no tax implications. Over £10,000 is fine, providing it is repaid within 9 months of the year end. So again, speak to your accountant before you do it, but borrowing money from the business can be a cheaper way of you funding personal needs. Next, we're going to look at business assets. So firstly, renting personal assets from the business. So for example, you might own the premises the business operates from. We've got a client where they operate from the barns in their farm. It might be more tax efficient to pay rent rather than salary and dividends because the rent of the asset is tax deductible and dividends aren't, and the income from the rent is not subject to national insurance. Next, we're going to look at personal use of company assets. So you may have assets that the business owns that you use personally that attract no benefit in kind. For example, you could use a laptop and an iPad for work during the week and personally at the weekend. Buying it through the company is a tax efficient way of doing it because obviously if you're buying an iPad and you're VAT registered, you can recover the VAT on it and you get the corporation tax relief on it as well. You can't take it to the extreme, so you couldn't buy a huge gaming PC, but, well, you can, providing you need that gaming PC for business use. But if you were just doing that clerical work on a laptop, you couldn't buy a huge gaming PC for it because HMRC don't like it. Next, we're going to look at employee benefits. There are a number of employee benefits that aren't a benefit in kind and can be a tax efficient way of rewarding employees, as well as benefiting yourself, other directors, and your family. Life insurance. Relevant life insurance are a tax deductible expense and are not a benefit in kind. So if you've got life insurance that you're paying personally, it might be worth looking at having a relevant life insurance policy and the business paying for it. Pensions advice. £500 per employee can be given without any benefit in kind, and the cost is fully tax deductible. So again, this is a way that you can reward your employees. Mobile phones. Mobile phones provided to employees and family members that are employees of the business is a tax deductible expense and does not attract a benefit in kind. So again, when you're looking at ways that you can remunerate your employees at the moment, you could look to provide them with a mobile phone. And this is one of my favourite ones. Anything except cash that costs less than £50. So this is referred as a trivial benefit where you can reward employees with gifts. So providing it's not performance related, is less than £50 and is not taxed and is not cash, it's a tax-free benefit and a tax deductible expense. So you could gift your employees perfume, a meal out or vouchers. There's no limit on what you can give employees other than the £50 each time, but there is a £300 limit per director per year. So for example, if you wanted to treat your employees on their birthday, you could give them a £50 voucher. It's tax-free and they don't, for both you, for the employee, and you get the tax relief on it. Staff functions. These are tax-free, providing they're £150 per head for an employee and director. And it can include a partner. You can have multiple functions and they don't have to be face-to-face, but I think now we're out of COVID, people are enjoying face-to-face a bit more. So for example, if you wanted to get all your team together because they've all been working remotely, staff functions is a good way of giving them a tax-free benefit. Employee car parking, providing the car parking space is close to the office. The expense for this is tax deductible and not a benefit in kind. So if you're working in a city centre and your employees have got car parking costs, this can be a way of helping them out and you saving national insurance on what you pay them. Training that is relevant to an employee or director's job can be put through the business and is a tax deductible expense. Other tax efficient benefits, lunches and snacks. Providing that lunches and snacks are provided to all employees in the place of work, this is a tax deductible and tax-free expense for the employee. Childcare support. There are still ways of providing tax-free childcare. If the childcare voucher scheme was established before October 2018, the employees can still be part of that. And if there is an on-site workplace nursery that is only open to employees, this can be provided to employees with no benefit in kind. Bikes and equipment. So if you have employees that like biking or you want to get fit, you can purchase bikes and equipment. It doesn't just include the bike, you can include equipment as well through the Cycle to Work scheme. On-site gym and sporting facilities. If there's a gym on site at your office and it's not available to the public and open to all employees, then this is a tax-free benefit. There are other taxable benefits still worth considering. For example, private medical insurance. Often corporate premiums are a lot lower than personal premiums, and while you pay tax on it, the overall saving can be more beneficial to put it through the business. Company cars. While traditional cars are not beneficial to run through the business, this includes hybrids. Buying a 100% electric vehicle through the business can be beneficial, particularly as you get 100% allowance against corporation tax in your purchase. Don't forget, employees can have more than one car, and a director can have a car even if they're not paid a salary. So we have got clients where they don't necessarily want to drive a company car, an electric car, sorry, but they have got an electric car for their partner, as it's more beneficial to put it through the business in their situation. It would be to pay for the electric car personally. Charging of electric vehicles. So if you've got a workplace and there is an electric car charge there, charging the car charging costs is not a benefit for employees, and it is a tax deductible expense for the business. Running costs for company-owned vehicles, again, these can be included providing there is no private use of the business. Business expenses paid personally. Home working expenses. You can claim from HMRC the rate of £6 a week for working from home, or you can claim based on the percentage of the actual costs of your house, including light and heat, rates, insurance, and mortgage interest. And this is often more than the flat rate allowance. We can provide a spreadsheet for you to do this, but please remember the COVID relaxation has now been removed for employees. Mileage claims, sometimes people think it's not worth the effort, but remember you can claim 45p for the first 10,000 miles you do and 25p thereafter. Just remember that home to office commuting, traveling from the home to office is commuting, so does not count. Congestion charge, again, if anybody's based in a city where there's a congestion charge, it can be claimed if there's a company car, and this is getting more relevant now with green zones as well. Business travel. If you're traveling for the business, typically using public transport, the cost can be put through the business, but one thing I often get asked is about first class. You can put the cost of a first class ticket through because it enables you to work on the train or on train. Subsistence and entertaining. Again, you can claim food and drink if you have to travel for business. This is a tax deductible expense. One thing that people often sort of get a bit confused or ask queries about is entertaining. While the cost of entertaining customers, clients, suppliers is not tax deductible for corporation tax, it's still more beneficial to put it through the business because obviously funds personally you've paid personal tax on. So by putting it through the business, while you don't get the corporation tax relief, there's no personal tax implications of it. Music, audiobook, and Amazon Prime subscriptions. If you listen to business books, if you're using Amazon to purchase items for the business, or you listen to Spotify in the office, these expenses can be put through the business. Just on a side note, with Spotify, you might just need to check that you have got the right music license if it is a public place. Points rewards. While this isn't necessarily a tax saving, but if you use cards to pay business costs, put them on a points card, and these rewards are a tax-free benefit. I've got an American Express card. We buy all our stationery, computer equipment on the American Express card. We're building up the points to get a free flight, and that flight is a tax-free benefit. Schools and university planning. School fees can be expensive, as can be university, and there are multiple ways that you can look to put these through the business, through the use of trusts or family members. This is a specialist area of tax advice. And if it does apply and you want to talk about how you can do it, please get in touch. And then finally, my bonus tip. This is more relevant than in previous tax years as interest rates are rising. If you've got surplus cash in your business and a mortgage, if you compare the cost of borrowing on your mortgage and with the rise in interest rates compared to the higher rate tax of your dividends, and this is over the life of the mortgage, it could potentially be more beneficial to pull a bulk of money out of the business, pay the tax and repay the mortgage, because the tax you're paying is often, or can be, depending on the mortgage product, less than the cost of the interest over the life of the mortgage. Also, just to consider, if you have cleared your mortgage, your personal requirement to draw out the business will be a lot less. Now, it varies on individual circumstances, but you might want to look at this as a way to sort of alleviate cash flow at the moment. So in summary, you may be thinking that all the ways that we've discussed is small tax savings. As Darren Hardy said in The Compound Effect is the principle of reaping huge rewards from a series of small, smart choices. So looking at how you, your employees and your family draw money and value out of the business, then changing it to make it more tax efficient can save tax. It puts more money in your business, your personal and your pension pots. When we've gone through a formal review with clients on this, over 5 years, the average saving is $13,495. So that's $13,495 more in your business, your personal and your pension pot than in the taxman's pocket. So what do I recommend you do as the next steps? Identify the areas that I've covered today that's relevant to you, your family and your business. Quantify the potential benefit. Again, you might think, oh, it's not worth putting my Amazon Prime subscription through. It only saves £1.20 a month. But I think I read somewhere the cost of my daily $4 coffee habit over 10 years costs something over $50,000. Plan an introduction of some of these ways into your business. You don't have to do them all at once. You know, if you take a copy of our checklist, it can be a sort of to-do list for you to check off over the space of the next 12 months. So how can we help? Firstly, we can give you the checklist for free. We can complete a tax review for you. The cost of this is $1,250 plus VAT, but it comes with a guarantee. If we don't find at least, sorry, my slide's wrong, it should be at least tax savings of £3,000, we will refund the cost of the tax diagnostic. As mentioned before, the average saving on this is £13,495. So I've blasted through that, sorry, and I feel that I've just chucked a load of information. Does anyone have any questions on on anything that I've gone through? I've got a few from the last time Jim ran this for me. I can go through those in a second. If anybody's got any questions, drop it in the chat. While I am looking at the chat, I will just go through a couple of questions that we had last time. So firstly, why is it not beneficial to put a hybrid vehicle through the business, but it is for an electric? Cars are taxed based on the CO2 emissions. So the higher the CO2 emissions, the more tax you'll pay. At the moment, there is a range for hybrid, which reduces the benefit in kind, but electric cars only have a 1% benefit in kind. The next question we had last time is how a small salary would be able to warrant a £40,000 pension. It's because it's not part of automatic enrolment, and the £40,000 is your annual allowance that you get each year. The last questions we had is surely school fees should attract benefit in kind. There are ways of structuring school fees, and it's very specific to individual circumstances. So I can't cover it on here. We don't actually deal with the trust side of it. When we identified that you could use a trust to pay for school fees, we refer it out to a tax specialist that we know. Are prepped credit cards as gifts considered cash? So if you send yes, so Steve, if you send prepaid credit cards as gifts, they are considered cash, but there are places like there's the One for All voucher that covers numerous retailers that you can give. So like, for example, we've recently done our kitchen and I wanted new plates. So I took £50 at different points up to my £300, obviously, on One for All cards that I could then redeem against the individual retailers to cover that cost. So while you can't give prepaid credit cards. There are schemes like the One for All that you can spend at various retailers. The other good one that my staff tend to like is Amazon. With an Amazon £50 Amazon voucher, they can pretty much get everything they want. The other question that I had last time was, if you charge rent to the business, won't it attract tax? If you've got no other property, there is a £1,000 trading allowance that you can claim, but also you get 19% corporation tax, and that's when it's comparing to dividends that you suffer at 7, so it'll be 7.5% next year at 8.25%. And then the last question I had last time was, why can I pay myself more if I have an employee? That's because there is an employment allowance on your employer's national insurance that does not apply to director-only payrolls. Just give it a minute to see if anyone has got any questions. With regards to the £50 voucher, this is a good way that you can extract value tax-free, but don't forget it's £50 at a time up to £300. Don't think there's any more questions. So I just want to say thank you for attending, sparing your valuable time to listen to me. I feel I've blasted through that. If you want a copy of the slides or you want a copy of the checklist, please drop an email at hello@spotlightaccounting.co.uk. And the main message from this is, it may look like all these things are small amounts, but combined they can have a great saving. It's just about tweaking how you draw money out of the business to save tax and put more money in your own pots. If you've got any feedback or there's anything you don't feel I've covered, please let us know, because obviously I put these on to help clients, obviously make you aware of our full tax review service, but it is more of an informative session. So thank you all for attending, really appreciate it. And if you've got any questions, just give us a shout, we're here to help. Thank you.